Welcome everyone to our second session on the business case for the private sector in large-scale food fortification. I am Lucie Clarsfeld-Magras. I'm the managing director at Hystra, and I'm very happy to welcome you today. Hystra is a strategic consulting firm specialized in inclusive business, and we've spent the last 10 years working on the private sector role in nutrition. And today we'll be sharing insights from the report we released back in October and updated in the last few days that presents the business case for the private sector in LSFF. Today I'm joined with a fantastic panel that I'll be introducing as we go through the presentation, as well as with Adrien Daud, who is my colleague at Hystra and who will be presenting the findings. First, why are we here? So if we move straight to the next slide, those who were there for the first webinar might have already seen this slide. But basically, the case for society of large-scale food fortification has already been made clear. Every dollar invested in large-scale food fortification brings about $23 of economic benefits. However, the business case for food processors, who are the ones who have to put the premix into their product and to bear the cost of that premix, is much less clear. So in our session today, we will try to understand what can be done to improve that business case, both to reduce the costs as well as to potentially improve the benefits that food processors can get by complying with fortification standards. In the last webinar last week, we talked about what were these costs, as well as how public-private dialogue could help improve collaboration and help ensure that the standards that are designed for food fortification are achievable by food processors. This time we'll focus on what happens afterwards and how to, again, reduce those costs and potentially increase benefits for food processors once standards are set. Without further ado, Adrien, where does the data come from? So as I mentioned, this is from a report we just released, which really tried to understand the business costs and risks of fortification and what solutions can help improve current compliance rate with mandatory fortification programs, as well as engagement of food processors in voluntary programs. This is based on our experience working directly with 17 companies engaged in voluntary fortification, as well as desk research and interviews with experts who have been working on mandatory fortification efforts. Over to you, Adrien, for the presentation of our findings. And maybe just one logistic point, if you have any questions, feel free to put them in the Q&A and we'll try to answer them in writing as we go or at the end in the Q&A session. Thank you very much. Over to you.
Thank you, Lucie. This is Adrien from Hystra. So as Lucie mentioned, we're going to look at two things in the following slides. One is how can we make that business case for food processors less challenging or perhaps even positive ultimately. And two, how can we make sure that millers play an active role that's complementary to the government in ensuring that there is long-term compliance with standards. So getting started on the cost side, the first thing to recognize is that when we talk about fortification cost, we are essentially talking about premix cost or cost of fortificants. That the breakdown here that's using data shared by the AFC last year shows the breakdown of fortification cost between the first year when a miller or a food processor is implementing a fortification, where there are setup costs that are quite significant, 20–30%. There are, of course, operational costs, and then there is the cost of the premix purchase itself, which is already 65–70%. And then from the second year onwards, or year one, if you will, once you've started fortification, those setup costs quickly become less than 4%. And so the bulk of the recurring cost within fortification for the food processor is really the purchase of the premix itself, which is 80–85% year on year, which is very significant. And so if we look at that premix cost in more detail, we also see that a good proportion of that is, of course, the fortificants themselves, their production cost, transport, and insurance. But there is also about 25% that is due to taxes. Here we have two examples of Nigeria and Senegal, where the exact nature of the taxes vary, whether it's import duty or VAT. They also vary year on year, depending on whether they are sometimes temporarily waived or then back up again, as it's been the case in Nigeria or in Pakistan, for instance. But on average, you find that 25% taxes are a good average here. And so that's quite a significant amount for millers, because we've seen in the first part of the webinar that even though it might be a few percentages of the retail price, as percentage of their own net profitability, this can be huge. We talked about 2.5% of retail price can mean up to 40% of net profit for millers. And so that's a huge impact for them. Whereas for governments, 20% of 1 or 2% of staple prices does not amount to much. So there is definitely a discussion to be had here. Taxes are still widespread, and there is really further research and advocacy to do. That's the first opportunity on cost reduction. Back to you, Lucy.
Yes, on this, I think it would be very interesting to get your perspective, Lydia Wanjiru, as a representative of Unga Group. Unga Group is a Kenya-based holding company that has a majority shareholding in companies involved with the manufacture and marketing of a broad range of human nutrition, animal nutrition, and animal health products. And so in particular, it's a big food processors for the whole East Africa region. Yourself, you are a group safety, health, environment, and quality manager for East Africa for this group. An accomplished food safety and quality assurance executive with over 15 years of strategic leadership experience in the FMCG manufacturing sector. You've been recognized for driving excellence in food safety management, safety, health, and environment systems, as well as regulatory compliance across multi-site operations. You have implemented ISO 22000, FSSC 22000, HACCP and GMP certifications, resulting in enhanced product quality, reduced customer complaints, and improved operational efficiency. So from your perspective, as a professional of quality management, as well as a representative of a miller like Unga, how do you see the significance of the premix cost in terms of the decision to fortify? And also, does that vary for a relatively big player like Unga versus smaller players?
Thank you very much, Lucy. Good afternoon, everyone. And yes, I'm Lydia Wanjiru from Unga Group, and I'm a miller. We are a Kenyan miller, one of the largest millers in the country. And yes, I agree with the findings from this survey. Premix is a big contributor, and it brings us a big cost. As a Kenyan miller, it is mandatory to fortify both maize and wheat flour, which we majorly play into. And this regulation came into 2012. So notably, you'll see that averagely our premix costs around 700 Kenya shilling. So this means that if I am fortifying in a mill like ours, around 200 metric tons per day on maize and 300 metric tons per day in wheat, I'll use approximately in a month 5.41 million for wheat and 3.91 million for maize flour. This then translates to close to 65 or 64 million annually for wheat and also 47 million for maize. Please also to note here, we as the largest scale millers, or the organization known as Cereal Millers Association, we only contribute to 40% the demand of the flour in the country. So 60% is being met by the small scale millers, and also the what we call the portion mill, who are not really very organized. So fortification becomes quite a challenge because of the cost. And this also then is also translated to our consumer, because we have to translate this cost to our consumer, meaning then the consumer might not end up getting the right benefit when we are trying to implement the fortification. Thank you.
Thank you, Lydia. We are really recognizing that premix cost is an issue. and we want to discuss solutions to reduce that cost and optimize the supply chain of the premix. We're going to see two of the biggest opportunities to reduce that cost. And the first thing is really linked to the structure of the supply chain. And here we have a great example with the example of the rice fortification in India that's been driven by the Indian governments over the past decade, and also with the work of PATH in support of that supply chain. Essentially, in India, the cost of rice fortification has gone from 4 to 6%, which is the global average, to 1.25 right now. So that's a tremendous success on the cost aspect. And that was enabled by the government offering, of course, volume guarantees for those for this fortified rice through social safety net programs. And that led to hundreds of new entrants in the supply landscape of fortified rice kernels, which led to a strong reduction in price. It should be noted that the government of India now recognizes that there might have been a trade-off to consider between quality and price, and so now there's a question of where that balance is, and so you might see things evolving in the future. But really here, what has been key in driving that cost down of fortification was the guaranteed demand from social safety net programs and the technical assistance from programs like PATH to help on supply chain monitoring, supply chain processes optimization, manufacturing technical assistance, quality issue fixing, and so forth. That's the first biggest opportunity to reduce cost. The second is really on achieving economies of scale in the ordering of premix. This graph is presenting two examples of premixes. You see that between 250 kg of order and 5,000 kg, there's a factor of 20. Reaching those levels can help reduce premix cost by between 20 to 50%. So that's also a huge opportunity to reduce cost here. That's the work that the GAIN premix facility has been doing. There's also work that's been done on order aggregation in Pakistan, for instance. And of course, this is still very not replicated as it should internationally. And that's mainly due to two challenges that we need to, or limitations that we need to recognize. The first is that it requires a lot of working capital to aggregate orders and place large orders. And that's a challenge for smaller millers and processors. And also that's limited by the shape of the premix. So any initiative needs to take these limitations into account. There's also the fact that order aggregation itself can represent a cost, and it should not outweigh the cost reduction that the facility can hope to achieve. Thank you.
So Nelly, we'd like to hear you on this one. So you are a senior industry specialist with IFC Agribusiness Department, which you joined in 2012. Within IFC, you use your technical expertise to support the investments in the fast-moving consumer goods sector in developing and emerging countries. You also lead IFC's nutrition strategy team, which goal is to help mainstream nutrition into IFC agribusiness portfolio, including scaling up investments and technical assistance programs in food fortification. Prior to IFC, you worked for more than 20 years in the food industry in Europe and the US for companies ranging from family-owned businesses to multinationals. So Nelly, you often mention that beyond premix and equipment, there are other hidden costs for food processors who want to fortify, including the working capital costs that Adrian just mentioned. Can you tell us more based on your experience working with millers?
Hi, everybody. I'm glad to join this and this webinar. Yes, in developing countries, access to working capital is an issue that we've seen with our clients, IFC clients, and that's one of the reasons that whenever we are supporting a business by through loans and investing in business, more often than not, there is a part of it that is just working capital and providing FX so that they can actually buy, because besides this, it's an imported product, so they need FX to be able to buy it. So access to working capital is an issue. And the idea that a miller is going to use part of that working capital to immobilize that money, that cash, by investing more than 5 times or 10 times what they need into macronutrients just to be able to store it, is not realistic. That's really not going to happen. And this is also why when, for instance, in case of high inflation, and you've shown in your report, as you've shown in your report, when there is inflation in a country, the first thing that drops is the compliance in fortification. Well, because it increases the cost of macronutrients, so it increases the working capital needed for macronutrients. And if there is inflation, then millers are focusing on buying flour, buying additives, and that one drops. And so the solution for this is is expanding this aggregation through governments, because one, they're the ones who probably will have the working capital to buy, and second, by distributing, by reselling to smaller millers, they will address the shelf life issues, which is another issue, which is that especially in developing country where it's hot and humid, you've got to have a cool storage for macronutrients, and one can't just store 5 tons of macronutrients because they won't have space. So for all these reasons, just saying to millers, well, if you buy more, it's going to be cheaper, might not be what they want to hear, and it actually might not be a realistic solution. Back to you.
Thank you, Nelly. So far, we've seen opportunities to reduce cost. Now we're going to explore opportunities to increase incentives. And the first thing that we want to recognize on that front is that of course, the first thing to consider in a mandatory setting where there is a standard with theoretically everybody should with which everybody should comply is that there should be, of course, a strong enforcement and enforced penalties. The problem is that this is something and we all know that this is not really happening in the magnitude that is required. You have here a few quotes that we've collected for this paper that show that the penalty to not for non-compliance is actually cheaper to pay than the cost of fortification in some settings. This has a disproportionate impact on small businesses, that it's rarely enforced, and that it's also very hard to pinpoint individual responsibilities within the value chain when there is an issue with compliance. So for all those reasons, it's rarely happening. And that means that the cost of non-compliance is not high enough. There's definitely work to do to increase that cost. In the meantime, and on the other hand, there is also an opportunity to increase the value of compliance, and only by weighing those two dimensions, cost of non-compliance and value of compliance, can we actually tip the scale of the business case. And here we have seen quite a few programs do interesting things on the incentive front, and that's what we display here on the right. And all of these programs start by recognizing that there is hardly any direct business benefit of fortification for millers. I mean, it does not lead to increase to prices. Consumers are extremely price sensitive. They are generally unaware of health businesses, so it's challenging to find direct business incentives. Yet there are some that can be made as tangible as possible. We've discussed already access to institutional markets through social safety net programs domestically. There are also export opportunities that programs can offer. You can have also incentives around volume guarantees and advanced market commitments. And typically that's where Fortified Whole Grain Alliance case is interesting, and we'll talk more about this in the following slide. And then in terms of other benefits, of course, technical assistance is into broader than fortification and into business operations is a very strong offer, and I will let Nelly talk more about this because this is something the IFC has explored quite a bit. And you have also the case of reducing marketing spends. This is something that the Micronutrient Fortification Index does best by offering visibility and communication opportunities to millers who fortify and participate in the index. It's basically free communication and marketing and raise the brand profile. And ultimately, one could hope to see as well fortification embedded as into investment themes and enabling millers who fortify to access lower cost capital. So that's all different kinds of incentives that we can think of and that programs are offering. It should be noted that without these programs, none of those incentives would exist. So tipping the scale in favor of compliance really relies on those programs, and compliance is actually built. Positive business case is actually built. This is something we are going to explore in further detail with the example of the Fortified Whole Grain Alliance in Rwanda. And here, this is a graph representing the impact of that program on the net profitability of the millers participating. The case here, or the pilot initiative within the program in Rwanda here, was to make these millers switch from refined, non-fortified maize flour to whole grain maize flour that is fortified. And so if you look at the start from the left, you see that we have a business as usual profitability for the miller of that standard product. And if we consider only the cost of switching to that whole grain fortified flour, which also included the need to increase the shelf life, it's definitely a net loss and a net reduction of the net profitability of the miller. So that's the line in red. But so if we stop here, the business case is negative. But the program was able to offer quite tangible benefits in addition to that, to mitigate and compensate those negative effects. And that's all the different green columns that we see on the right of the graph. And they relate to avoided costs, like avoidance of penalties, reduced costs or savings from the technical assistance received. On this case, it was related to the improved efficiency of the production, because the whole grain gives a higher extraction rate of almost 98%, and that reduces wastage in the production, and so that increases volumes. That also has an impact on the amortization of fixed costs. And that's a very important KPI for a miller, because the utilization rate of the production tool is really what makes or breaks the profitability of the milling business. And so any initiative that can raise that utilization rate without increasing or not as much the costs is really a key for millers. And the last thing is, of course, that the program enabled to increase margins through higher sales, because the output of this new flour was the Rwanda school feeding program. And at scale, there's a 4 million meals served every day. So overall, this is a net positive. And the program has observed that the millers who participated saw their net, their operational profitability raised. So this is definitely a real case of a positive business case in fortification. We recognize that it's not necessarily fully replicable, because when we talk about staples, it's not always possible. But this is to show what it takes to build a positive business case here. And so just a few points to summarize from what we've seen, whether on the cost reduction side or the benefits or incentive side, and how to create a truly positive business case. We've talked about the cost side, so really pursuing efforts to waive those import duties that represent 20 to 25% of the premix cost, which is the biggest cost component. And then really helping governments restructure the supply chain of fortification and help millers access lowest cost possible quality premixes in an aggregated manner to benefit from economies of scale. And then on the benefit side, raise the cost of non-compliance and lower and increase as well at the same time the value of compliance. And that can be done through what we've discussed just now: technical assistance, access to markets, brand equity, and potentially in the future lower cost capital through responsible investing. Thank you. Back to you, Lucy.
On responsible investing, Greg, we'd love to hear from you. You have been Executive Director of the Access to Nutrition Initiative, also known as ATNI, since 2022. ATNI is a global nonprofit dedicated to improving markets for nutrition. Before that, you have spent the last 2 decades working on private and public collaborations to improve health. This included working on fortification with USAID in Central Asia and leading Gain's food fortification portfolio from 2011 to 2019. But more recently, I know this topic of responsible investing for nutrition has been a key focus. So from your perspective, how might it be possible to integrate fortification into criteria for responsible investing?
Great. Hi, everybody. Thank you for the question. And it's great to see so many names that I recognize in the attendees list. Really great to be part of this. So it's a question that we're really digging into at ATNI is, can responsible investing, and that includes everything from institutional investors, which is where we have a lot of experience, all the way through to socially responsible investing, impact investors, and the like. How can they start to take fortification as a financially material investable issue? So let me start by making some general remarks that investors, government, everybody's going to agree with these. We know nutrition is a good investment. We know that the return on investment, as the World Bank has just told us in October, can be $23 to every dollar that's invested in it. We know that fortification is one of the better nutrition interventions. It's economically sustainable. It brings you those returns. It does not require behavior change, or very, very little. It doesn't affect the organoleptic properties of foods, and it really doesn't change the price, as we've just seen. And everybody's agreeing with that, but that doesn't necessarily translate for business or for many investors into a business case, into a microeconomic argument. It's that the macroeconomic is fine, but we need to be talking about short timelines and, eventually something that's not going to hurt the bottom line. I really like your report because you show that in a very compelling way that it only costs 0.2% of the cost of vegetable oil to fortify with vitamin A. You say it's 1.2% of the original wheat flour processing cost to provide essential iron. And that's excellent value for money, but who's going to cover it? And there is that ceiling that you talked about that processors can absorb. So to get to the question and the answer on investments, what are the options for incentivizing businesses from the financial community? One of them is ESG, or environmental, social, governance investing. So the S in ESG, nutrition, would need to fit within that. We have seen some investors ask companies, and I'm talking now of the publicly listed companies, do you have nutrition in your portfolio? And usually the way that the companies disclose this information is they go straight to fortification because it's an easier indicator, than some of the other ones that we're looking at. And there are other ones that could also be used, but fortification is one of the easiest ones. Now, that's for publicly listed companies, and that's not necessarily going to involve many mills and refineries, although in emerging markets, we are seeing mills and refineries slowly going on to local stock exchanges. So that's one, but also impact investors. More and more in blended finance operation, impact investment funds, we're seeing the impact investor ask the question, how are you going to ensure that your food is good for health? And again, fortification becomes one of the easier indicators. So there are now draft indicators being used for ESG investors, institutional investors, that is, that have assets under management, as well as impact investors who are looking to put debt and equity finance into smaller and medium-sized enterprises who can fortify. I also want to call out, the TechnoServe's micronutrient fortification index. It's really useful as well to incentivize investors to look carefully at companies that are fortifying. But we're also working on a new index for B2B, business to business, and this is looking at premix suppliers. We're calling it a vitamin index, capital V, and then a capital M, vitamins and mineral index, which is ranking premix companies by the quality of the premix, the corporate governance of those companies, as well as the nutrition commitments. And we're trying to make that index available for investors, whether it's a publicly listed premix company, and there's a few of the larger ones that are, but also the ones that are family owned or privately owned. So that they can use that to make better investment decisions, and will also provide the results to government so they can make good decisions on which premix companies to use if it's a public procurement operation. So these are just some of the ways. And of course, the budgets are absolutely critical that for regulatory monitoring at the national level, that governments create a budget line for fortification, ideally, I would say, in the food safety budgets of these countries, so that the quality and the checks on fortification is elevated to that of a food safety issue. I think if we do this together, we're going to see the business case really strengthen for fortification. And then all those easy arguments I made in the beginning will be that much easier to make and translate to implementation. Thank you.
Perfect transition for the last part, which is on how to ensure long-term compliance. Back to you, Adrian.
Thank you, Greg and Lucy. Indeed, now we're going to look at beyond that compelling business case, how to make sure that there is long-term compliance, and how can the industry or the private sector, the food processors, participate in that effort and complement the role of government. So we are going to look at the first thing, which is that traditionally enforcement and compliance is the responsibility of government. There have been success stories there, like in Nepal on the salt iodization program, which over decades led to almost a 90% compliance of the industry with iodine fortification. And a key part of that success was the extensive government-led enforcement, monitoring, and control of the value chain from import to sales. And that played a tremendous role in that progress. We should recognize that this is also very costly, that not all governments are able to do it for all staples and for premixes that are multiple micronutrients and very complex. So there is definitely work to do to complement the government efforts. First opportunity, of course, is to help reduce the cost of that public monitoring. That can be done, for instance, by helping public agencies integrate fortification standards into their routine food safety checks, for instance, building new monitoring tools that are less costly to run and to implement. And also, as we've seen with the rice fortification industry in India, help government consolidate supply landscapes so that it's less costly to monitor. So there's definitely a role for the development community to support government efforts on that. And here we are also quoting the successful example of PATH in the rice fortification industry in India, where they provided a lot of support to the industry and government to work on supplying for these social safety net programs, as well as building traceability within the value chain, implementing tools, enabling quick testing, etc. So that's really something that's key to complement government efforts. On the other hand, there is also a more proactive role that the industry can play. And here, that's again the example of the MFI within our LSFF sector, where it's not just an index that gives visibility, but it's also an opportunity for millers to have a self-assessment and know where their areas of improvements lie when it comes to fortification. and then ultimately create a group of self-improving millers who fortify and who have a vested interest in making sure that there is a level playing field and that they can fully benefit from these advantages that they started building with the program. So that's really creating a positive dynamic within the industry. That's also something that we have observed in other sectors, and that actually go even further than this. For instance, the Rainforest Alliance label, which everybody knows is largely funded by the members of the association, and that money helps fund audits and checks to make sure that the industry that is benefiting from the label are actually complying. And so that's definitely an example of industry self-regulation. And so that's possibly also something that is in the future for the LSFF space. And lastly, the larger players in the value chain also have an opportunity to play a relay role of the government through their own procurement guidelines and the way they can influence the value chain that's below them. Thank you.
Thank you, Adrian. I'd like to come back to the micronutrient fortification index that you've mentioned, Adrian, and that Greg also shouted out for. And Brent, we are lucky to have you from TechnoServe to testify to what the index has done. You bring 25 years supporting agricultural value chains, and you have spent the last 15 years with TechnoServe, focused on support to the food processing sector. You were the global director for the food processing practice, and until recently, you were the director of USAID flagship large-scale food fortification program, which was called USAID Ford. You are now a senior strategic advisor in the Gates-funded Ignite Miller for Nutrition program, which has set up the MFI. So based on your experience, what potential mechanism could help enforce long-term compliance, either through support to governments or incentives for the industry to self-regulate, like what the MFI has done? Over to you.
Thank you, Lucy. Yeah, and my pleasure to join this rich discussion today. I think I'll just start off by reminding ourselves, that fortification is still a health intervention that relies on industry to deliver, and that it's typically something introduced as a bolt-on to an existing operation, right? Both for industry, but also for government, right? So the government has also had to monitor something new, develop standards, monitor it, and enforce it. So it's this weird sort of addition to an existing competitive industry. And then, as your slide shows here, or your research, to get industry to do this new activity, the traditional approaches or the push for this has been around the threat of penalties for non-compliance. And the emphasis has gone into reinforcing the infrastructure to do that more and more effectively, right? And ultimately, this is a form of negative reinforcement, right? It's not wrong, it's negative reinforcement. If you don't do it, you will be penalized. And that's, so I guess the narrative we're trying to change and have been working on is how can we improve upon this to include more positive incentives, something that you do and are rewarded for doing, right? So Millers for Nutrition is a clear case of that, where they're really trying to reward good practices through industry. And so how can we help do that? But also, how can we even make life easier for regulators, right? It's something new to them. It's a bolt-on for them as well. They have to do lab testing. They have to do inspections. They have to understand the standards and how to test for those, etc. So one way we've done this is to really look at what counts for industry, which is their brand, right? And to make it easier, and then also to make it easier for governments to monitor and to prioritize their limited resources where it can be needed most. And the example for this is the micronutrient fortification index that we've piloted and has been discussed a little bit. And this MFI, the index, promotes self-regulation from companies. They conduct a self-assessment. And then that self-assessment is also validated through third-party product testing. And it ultimately results in a publicly accessible comparative index. So it's an index basically on their fortification quality, and it's represented by their brands. And as we know, companies are very concerned about their brand. And so it creates this sort of drive to the top in fortification quality. And ultimately, it's a way of recognizing and rewarding top achievers, and also helping motivate low-scoring companies to improve in their fortification practice so they can climb up in the index. At the same time, it also helps regulators and the development actors to know which companies they may need more help. So regulators can spend less time, for example, on low-risk top achievers in the index and spend more of their limited resources to raise the standards of those lagging behind. So we've done this. It does require quite a bit of coordination with government and industry and the private sector, but we've done this in Nigeria and Kenya with good success, helping to improve the motivation of companies there to adopt good fortification quality, but also at the same time sustaining those compliance to those standards. So that's a little bit about the MFI and how we can add positive incentives to the industry. Back to you.
Thank you, Brent. And just to recap our main takeaways from this last section, essentially, what we see as key opportunities is really to further support governments on better integrating the fortification agenda and practices into the different agencies, ministries, so that the cost can be further shared, and also supporting on industry consolidation. The second point is really ensuring that we create a coalition of fortifying millers who then have a vested interest in ensuring that there is a level playing field and that they can keep on benefiting from what they've started doing as part of fortification programs. And the third point is really pushing these mechanisms that encourage self-regulation from the industry and potentially take learnings from what is going on in other sectors and that could be applied in the future to the LSSF space. Thank you. Back to you, Lucy.
Thanks, Adrian. We'll now move to the panel discussion. I'd like to start with you, Lydia, maybe to reflect on what Brent was saying around the MFI and get your perspective as a miller of what are the kind of key bottlenecks beyond cost that you already talked about to fortification, and how programs like the MFI or like Millers for Nutrition has helped you overcome some of these barriers.
Okay, thank you, Lucy. Yes, we are part of the members of the MFI, or what came about last year called Millers for Nutrition in Kenya, which we signed off on. And the platform has really assisted us in not only for fortification, but it's looked up after food safety and quality assurance. Because if you get into the platform, you're able to review or you're able to assess your processes from incoming raw materials up to the end of how you release the product and the processes you have in place. Then also the MFI has also enabled us in checking if we are fortifying the product correctly, and it has given us the platform of quality assurance in checking or analysis of this, the premixes themselves, and also the product itself. So for me, it's been a good thing for us, but maybe one of the things that needs or what we need as millers is to get these resources here in our plants or somewhere local, because normally what would happen is these products are collected and not on monthly basis, but in some frequencies, and then they are sent out there for analysis. But as Grant said, that fortification needs to be elevated to become a food safety issue. And for me, when I look at food safety issue, the buck stops with the FBO or the miller. What we are releasing out there, we should be able to feel that whatever we have declared or whatever we said we fortified, the last consumer or the main consumer gets exactly what we fortified. So when we can only do this by being supported on quality assurance and confirming that the premixes that we are getting are meeting the requirement, and also how we are fortifying in the plant is meeting the requirement. So the other thing on the support would request is on the consumer awareness. I talked about the mandatory fortification that we do in Kenya for both flour, for both maize and wheat flour, but there also voluntary fortification that some millers are doing on also of FBOs. If the consumers would be educated on this, then it would create more demand or more demand for the fortified product. I'll give you an example of a product. Yes, it's mandatory to fortify maize and wheat flour, and maize meal being a staple food in Kenya, you'll find that after fortification, the maize meal is not as white as that unfortified maize meal. So you find a consumer are preferring the more maize meal, the more whiter maize meal than the other one that is fortified, but they don't understand why you're doing this. So consumer awareness or consumer education would be really help us as FBO and millers. Thank you.
Thanks a lot, Lydia. And I think that's something that also happened in Nepal, that the types of salt that were fortified versus non-fortified were not the same. And there they really used that as a way to help consumers choose the refined salt that was actually the fortified one versus the coarse one, which people were more used to. But they explained that the fortified one was indeed the very recognizable refined one, and that helped the industry. So you're saying something similar so that consumers can recognize which flour is fortified more easily would also help in your case. Thank you for that. Nelly, from your point of view as an investor and also TA provider, how does that resonate with your experience in terms of providing supports, not just on fortification, but all the rest? And also on the cost side, do you see good practices in terms of cost optimization that you've seen in some places and that are not sufficiently replicated today?
So when we came into, when we put this food fortification program together, what we recognized was the cost aspect of it, right? So fortification is a cost formula. We talked about working capital, etc., etc. And our idea was, how can we look at the whole operation and see where we can find efficiencies, reducing cost of operations of the mill in general, push good fortification practices so that there is a kind of compensation in terms of, if we improve the operation of the mill by itself, that's going to compensate, at least in part, for the cost of implementing fortification and basically of running the mill. And so we looked at optimizing. Of course, when we talk about cost optimization of a mill, the first thing that one can think of is yields. How do we improve yields, extraction? Of course, we talk about resource efficiency, increase the operational efficiency of all the equipment, including fortification equipment, the type of equipment that is used, the type of dosage that the equipment that is used is very important. The maintenance on equipment, all this is very important. And one thing that we don't think about a lot is workers training and workers productivity. So when the program that we've put together includes training workers for them to adopt good practices that will help the productivity of the mill. So for us, it's a whole approach. It's not only for the fortification, but also the mill, training workers and looking to improve the operations in every little things that we can. We actually got a good example of a client that we were looking to invest into that had a miller and that had just been bought out by one of the big traders, international traders. And the traders explained to us that, yes, I mean, the mill was compliant. The mill was compliant, was one of the largest mill in the country. Yes, they were compliant because they were fortifying. Yes, the government was checking on a regular basis. But when they went in, what they did was realizing that the variability of the fortification was such that some bags of rice would have a lot of fortificant, others wouldn't, micronutrients. And just fine-tuning this, making sure that the same quality was delivered over time. And this was one of the largest mills. You would think they were doing well. You think they knew what they were doing. Or they realized that even in this kind of big, because otherwise they wouldn't have bought the mill, even for these big operators, there is still a lot to be done. There is still training to be done. And so they did that on fortification. They also did that on the operation as such. And basically we showed us how they had improved, because they bought the mill, so they had to have the return on investments. It was very financial. So. But I mean, everybody benefits from it, especially consumers. And so no mill is too large, or no mill is too big to be looked at, and their process to be, reviewed and improved.
Thank you.
Back to you.
I want to make sure we have time for a last question for both our remaining colleagues. So maybe, Greg, you already mentioned the opportunity to have a B2B index beyond the ATNI index that you already have. So how do you see that playing a role? How advanced is it? What are the next steps on that B2B tool?
Sure. What we're trying to do is complement other tools out there. I used to be at Gain, where we have the Gain premix facility, which is doing excellent auditing work and looking at HACCP and good manufacturing practice. What our index is intending to do is to look at the top 10 in terms of revenue premix companies around the world. So it's a mix of global ones and several that are in India and in China primarily, and really rank them on a few things. One would be the quality of premix. So this will be obviously using the data that's out there, including what the Gain premix facility has done, but their corporate governance structure. What kind of commitments have they made? Are they following through with commitments they've made on nutrition? What kind of technical support are they providing, if any? And then to be able to make that data available and the actual ranking, as well as any qualitative assessment that we do. We will be doing deeper dives in India and in Kenya. Make those available to policymakers, to procurement agencies. If they're procuring premix for large school meal programs, or for the government subsidizing premix in any cases, but also, and more importantly, to investors. So we've mapped the ownership structure of these 10 premix companies, and we want to make sure that the index is very much something they can use. Now, we go into this knowing it's not the solution, it's only part of the solution. I think just as we talk about food control of compliant food fortification, we also have to be cognizant of the importance of food control for premix suppliers, or some kind of regulation and checks on them as well by government. So it's going to complement what's out there in the ecosystem, and we hope it gets us closer to high quality, affordable premix and better governance of the companies that provide that. And you asked, sorry, Lucy, when is it going to be ready? We'll have it launched in the end of this year. Working on it now.
Fantastic. Now, I think across the panelists here, we really have all the pieces of the solution that are required, between the technical assistance, the checks on the premix suppliers, the thinking around the financial structures that can support the compliance food processors as well. Maybe one last question for you, Brent, to come back on the MFI and the other programs you've supervised at TechnoServe. What have you seen across your vast experience as being most valued by food processors themselves in terms of the support you've been providing, understanding that fortification is just a small bit of what they do, and they value other things in their business, as I think everyone has mentioned?
Yeah, thanks. Yeah, so it's just reminding, I mean, it is a very small addition, right? You're looking at less than 500 grams in a whole ton of flour, for example. But it's because those levels are so small that we need them to constantly be there in order to get the correct averages over time, right, for the health benefit. So how do we get the industry to prioritize or give us the due attention it needs for it to actually work? So what we do is have been doing is to help them look at their business holistically. If we just approach a factory and say, I'm here to talk about your fortification, you'll very quickly be put in a corner and it's hard to get out of. So I think for development and advisors and people working on the fortification agenda really need to approach a company with their holistic business approach. So some of the ways we do that, some of it's been covered, but examples are to improve their overall quality. As was described earlier in the MFI, for example, yes, we do. Part of that is product testing for compliance, but there's a whole plethora of other aspects to that, which my colleague from UNGA was describing. Right? It's the process. It's the governance structure, the steps that are in place for your overall quality. And if you can improve the quality of a product, for example, extending its shelf life, its taste and everything like that, that makes it more competitive. And that appeals to their brand, and that makes it something they're encouraged to do. So it's not just, say, the dosage rate of micronutrients. It's looking at their GMPs, their HACCP systems, and ensuring fortification is embedded in that. Another one is cost optimization, which Nelly covered. So I think improving efficiency and cost savings there is straightforward, and that can help companies understand how to absorb the added costs. And another thing is to look at the trend and the sort of modernization in industry, right? There's more digitizing, there's more automating going on, and these are perfect opportunities to support these efforts and embed fortification in them. New systems really help track addition rates, for example, of micronutrients. They can even stop machines when the premix runs too low, things like that, and so that they can ensure consistency of these tiny amounts that are required for the application. And also they help companies avoid costly overages, for example. They get the rates right. They're not doing the stop-start thing, and they're not wasting money on what is expensive, which is imported premixes. So I think taking a whole business approach is one way to make industry adopt fortification and take you more seriously, but also one way to help them embed it. What you ultimately want is have them embedded in their SOPs so that it's less likely for it to be always this sort of external appendage that is a bolt-on that could be cut when times get tough, right? So ideally, you help them see fortification as a part of their whole quality product and their brand, and therefore it's just SOPs. We do it as normal every day, and if it's not working, the machine stops and we fix it. And that would be the ultimate end goal. Thanks.
Thank you. So really integrating that aspect of basically fortifying into day-to-day operations and quality processes, and not making it something on the side, and providing TA overall. Well, thank you for these insights, and thanks all of you for these insights. We're at time. We've tried to answer some of the Q&A as we went, but I think it's time for conclusion. So first, I would like to extend immense thanks to all our panelists today, who I think really gave a superb view of everything that can be done to improve the business case for large-scale food fortification. And just as a conclusion, some of you asked, the report is available on our website at the link that's at the bottom here. Feel free to send any queries if you still have any. The recording of the webinar will be available in the next few days and will be shared with all the attendees. Yeah, we hope this was helpful, and we hope this is one more step forward to ensuring broader compliance with large-scale food fortification and broader impact. Thank you all again, and looking forward to large-scale food fortification, even larger scale, at larger scale.